Okay, let's talk diversification, right? Because I just had a discussion literally last night, and I was talking with a buddy, and as we were talking, I kind of wrapped my head around the fact that we were talking about two different kinds of diversification. He was talking about being able to have multiple streams of income, being able to, like, I can invest, I can trade, I can do this and that. And initially he was like, yeah, I wish I was more diversified. And my response, my instinctual response to him before I fully knew what he was really talking about was that diversification is for those that are scared. Diversification is for those who don't have enough confidence in their own abilities or what they're actually doing to really, to really position themselves in the best possible place. So what I mean by that is just the fact that if you have to, like, okay, let's take your stock portfolio, right? And if you've got to invest in 30, 40, 50 different companies, there's nothing wrong with that. There's not. A lot of people do that. A lot of people invest in, but it's because they don't have enough confidence in the one that they're investing in. These big hedge funds, Berkshire Hathaway, like these big corporations, big investment firms, like what they do, they invest, yeah, they have a handful of investments, but they have a handful. They have 10 and 20, and we're talking about millions and billions of dollars. We're not talking about you spreading $100 out across 5 different things. If you've got $100 and you've invested in 5 things, did you really have enough confidence? Because if you had enough confidence, maybe that $100 would have done you a lot better to put it in one thing. Or maybe you saw 2 companies that were really about to take off and you're like, I'm going to put a little in both because I want to capture a piece of both of those pies, but I just don't have enough right now. That's fine. See, because that's not diversification for the sake of diversification. That is diversification for the sake of knowledge that you have. And that is different. When you have knowledge of different companies about to take off because they're doing well and you're trying to spread your money out because you want to capture a piece of all of that, good for you. But that's not what most people do. Most people diversify because they don't have enough confidence. They don't trust the tech market. They don't trust the money that they got in oil. They don't trust the money that they got in medicine. They don't trust they're like, I gotta have a piece of everything because I don't know what I'm doing. I don't know what I'm doing. Like I said, that's the fear. That's lacking confidence in yourself. That's either it's lacking confidence in yourself or maybe it's an awareness that you just don't know. Which, there's nothing wrong with that either. But at the end of the day, maybe your money would be better off going to someone, an actual investment firm, and saying, hey, I'm going to give you my money. I'm going to give you, your little piece, because a lot of them charge you. Some of them charge 1%. Some of them charge 5%. Some of them charge 2%. But when you're talking about 5%, 2%, 10%, 1%, some of them really do charge that little. But when you're talking about that fraction, that little percentage of guaranteed profit, now maybe guaranteed it's a lot more secure than you if you're not knowledgeable. If you haven't taken the time, these people have gone to school. These people have this is what they do every day, all day long, is they learn, they study, they educate themselves to try to make you the most money so they can get the most money. Because if you're not profitable, they're not profitable. Now, my homeboy, he was actually talking about diversification, about different businesses. And that is absolutely wise. Having different streams of income, as long as it doesn't spread you too thin, is incredibly wise. You need multiple streams of income so you have money coming in from all over the place. So that way all your income isn't bound by 1 or 2 things. Just like he mentioned the fact that I trade. And I trade Forex and stuff. And with Forex, come the week of Thanksgiving, that shuts down. If y'all haven't traded Forex before, then you won't understand that. But the reality is that Black Friday has a huge effect. And because America, the United States, has a lot of money that goes into Christmas, a lot of money that goes into Black Friday, and a lot of their products and things that they sell, that they mark down, they get it from overseas, man. They get it from all kinds of different countries. There's companies that are coming out of different countries. There's manufacturers that are out of different companies or countries. And so with all these different companies and countries that are involved in this huge influx of revenue, the Forex, the currencies in different countries fluctuate like this. They jump, they drop, they jump, they drop. They're all over the place. So in the month of December, if you're investing, or let me rephrase that, if you're trading currency in the month of December, what you're doing is gambling. Now, I know a lot of people who do, but the wise ones and the big corporations, the big firms, the big hedge funds, they shut down for the month of December. They don't trade. They stop trading until the first week of January. So he was like, well, dude, you got like 6 weeks that you don't trade. And I was like, it's true. I got 6 weeks that I don't trade. See, me, I look at it as I get a vacation. Now, I got other streams of income. I got other things happening. And I got other things that I do, just like this right here that I'm doing with y'all, this content that I create. So it's like I'm always doing something. But when I'm down, when my trading is down, I'm not looking for something to replace it. I'm enjoying the time down.
Housekeeping seal. I checked because
Anyways, so that kind of diversification is absolutely encouraged and absolutely great. And his idea was that, me having that 6 weeks off, that was an opportunity for me to do something different. For people who have business like that, or people who have business that has transitional periods throughout the year that are either busy or have lulls or things like that, ultimately, hopefully, with the exception of things like trading, hopefully your business is something that grows and thrives and ultimately is dynamic throughout the year and not something that only thrives in certain months. But say you have a seasonal gig. If you have something that's seasonal, then absolutely, maybe you want to see if you can find something that during those lulls or during those off seasons that you can have that going and generate some revenue and cash flow and things like that. But hopefully, if your business is successful enough, even if it's seasonal, then during the down periods, that's just time for you and your family. But anyway, so the idea of having diversification within your portfolio, if you find different things, then there's always reasons to branch out. There's lots of very successful investors, venture capitalists, people like this that ultimately invest and put their money all over the place. Different businesses, different companies, different things, different platforms. They have got money all over the place and all of it's generating income. But see, the thing is once you get to that level, you're not really the guy who's managing all of it anymore anyways, which is a great thing. If you're spreading yourself so thin that you're not really managing it anymore, then, or that you can't manage it, but you haven't hired anyone to manage it, then you've got yourself in a sticky situation. But if you think that you need to diversify just because it's one of those buzzwords, so to speak, it's a buzzword. It's a word that people throw around in social media and in little platforms, and you see it all, it's a buzzword. And so you're like, oh, well, they say I should diversify, so therefore I'm going to diversify my platform and I'm investing in things I don't know about. What you're doing is you're spreading your money around because you're too fearful and you don't really know what you're doing. That's a bad place to be. As far as having several streams of income and revenue coming in, cash flow from different places all at once, absolutely great idea. You should absolutely be doing that. So it's just all in what you mean by the word diversification. Just got to take it for what it is and really make the most out of it. This is all about developing more cash flow, getting to the point of a true state of financial freedom, and going to bed every night with more money than you woke up with. It's your boy. Be sure to share this video with somebody. Share it with a friend, family member, whatever. Make sure that somebody else knows what I'm talking about. I hope this helps you, and I hope that you'll share it with someone who it might help them also, because that's the goal. That's the idea here, is that we can all get into a better place. It's your boy. I'm out.